Friends, this video discuss what are the major changes in the income tax return for the financial year 2019-20. The Government of India, through a notification number 31/2020 on 29th May 2020, the Ministry of Finance issued a notification by exercising the CBDT powers given under section 139 of the Income Tax Act. They introduced a new rule, Income Tax Act 12th Amendment Rules 2020. Through that notification, CBDT issued various forms for filing income tax return for the financial year 2019-20. Form number 1 is known as ChANGEs form, ITR 1 ChANGEs form, and ITR 2, ITR 3, ITR 4, that is SUGAM form, ITR 5, ITR 6 and ITR 7 is introduced through that notification. The old form of ITR 1 and ITR 4 is withdrawn, and they incorporated some changes in the new forms. ITR 1, that is also known as ChANGEs form, that is mainly for salaried individuals earning up to rupees 50 lakh annually. In that form, now department asking the nature of employment, whether you are working in central government, state government, public sector undertaking, or you are a pensioner, others, or you are from family pension. These are the details asking in ITR 1. ITR 2, that is for individuals and HUF not having income from profits and gains of business or profession. ITR 3, that is for individual and HUF having income from profits and gains of business or profession. ITR 4, that is known as SUGAM form, that is for individuals and HUF, and also for firms other than limited liability partnership firms, and that being a resident having total income up to rupees 50 lakh and having income from business or profession, which is computed under section 44 AD, ADA or AE, that is presumptive taxation. ITR 4 should be, SUGAM form should be used. This ITR 4 is not applicable for individual who is either director in a company or have invested in unlisted equity shares. They are barred from using these ITR 4 forms. ITR 5 is for person other than individual, HUF, company and person filing ITR 7 forms. ITR 6, that is for companies other than those companies claiming exemption under section 11. ITR 7 for person including companies required to furnish return under section 139(4)(a) or 139(4)(b), 139(4)(c) or 139(4)(d). If you have a taxable income that consists dividend from domestic companies, you are not eligible to file ITR 1 form. And also person with joint ownership of a house property cannot file ITR 1 or ITR 4. The new ITR form, the assessee have to answer some 3 questions related to your deposits in current account, your expenditures on foreign travel, and also your electricity bill. The following are the 3 questions you have to answer in all the forms. Whether you have deposited an amount or aggregate of amount exceeding rupees 1 crore in one or more current account during the previous year. And the second question, have you incurred expenditure of an amount or aggregate of amount exceeding rupees 2 lakh for travel to a foreign country for yourself or for any other person? If you have incurred rupees 2 lakh for travel to foreign country for yourself or any other person, you have to answer that question. And the third question regarding the electricity consumption, whether you have incurred expenditures of an amount or an aggregate amount of amount exceeding rupees 1 lakh on consumption of electricity during the previous year. If you have incurred electricity expenses for the financial year 2019-20, rupees 1 lakh exceeding rupees 1 lakh, you have to answer that question whether you have incurred that much expenditure. And other changes, we know that the income tax department has allowed taxpayers the laxity of making certain tax saving investment for the financial 2019-20 till 30th June 2020. Because of this lockdown, the government given a relaxation to the assessee to invest up to 30th June 2020. That investment is eligible for Chapter 6A deductions, including your ATC investments, ATD, Mediclaim, ATG, donation, etc. And also that relaxation was available to claim the rollover benefit in respect of capital gain under section 54 to section 54 GB. That also was extended to up to 30th June. Therefore, the department now asking through their ITR forms details of all those investments and payments made between April 1 to June 30. You have to give the bifurcation, the expenditures on investment you made up to 31st March in separate column, and between 1/4/2020 to 30/6/2020, whether any investments you made for purpose of Chapter 6A deduction, that should be given separately in another column. Deduction attributable to investments or expenditure made between 1/4/2020 to 30/6/2020, that should be given in separate column. Friends, I also take your attention to the last date for filing the ITR for the financial year 2019-20, that is extended from July 31st to November 30th, 2020 for non-audit cases. And also I take your attention to the new Form 26AS. There are some major changes in Form 26AS. Now the Form 26AS, in addition to your TDS and advance taxes, gives much more details, and therefore Before filing income tax return, you should compare and see what are the details included in Form 26AS and bring those details in Form number 26AS, that is given in 26AS, to your income tax return. The new 26AS, in addition to information related to tax deducted source or TCS, specified financial transaction, your payment of taxes, demands, refunds, pending proceedings, and information related to completed proceeding, etc., are available in Form 26AS, and therefore you should be careful while filing your income tax return to avoid any mismatch between your income tax return and Form 26AS. That's all now. Thank you so much for watching this video. Thank you.